In this video, we are going to look at NVIDIA's stock price and the underlying business to see if it meets the value investment criteria. We are going to look at some of the company's financial figures and do a calculation to see what the stock should be worth. Also, a quick legal disclaimer, I'm not a financial advisor and this should not be taken as financial advice. Please consider talking to a financial advisor before making investment decisions. To start, we want to look at the profit before tax and expenses. This will tell us the margin or percentage of money a company keeps before tax and expenses. 40% or more is desired here, very close to 40 is okay as well. Next, we want to look at the profit after tax and expenses. This is a measure of a company's net profitability and we're looking for 20% or higher. Next up is retained earnings. Here we want to see steady growth. If it's not growing steadily, then the money the company is earning is not consistent year on year and can be a result of volatility. Next is the return on equity. This is a measure of the profitability of a business in relation to the equity or money the company has. Generally, 15 to 20% is good, but it can vary between industries. Next, we want to see if the company can pay off its debt in less than 4 years. The shorter time to pay off the debt, the better. Next, we want to calculate the capital expenditure to income ratio. The lower the better, so less than 25% is great and less than 50% is acceptable here. Okay, so for NVIDIA, they've passed all the sections and look very promising so far. Also, I want to set a goal of 100 subscribers by January 1st, 2022. If you can help me reach this, I would really appreciate it. And remember, subscribing is free and you can always unsubscribe in the future. Okay, to calculate the intrinsic value of the stock, I've got the EPMS, growth rate and PE ratio from Yahoo Finance. And there are two ways you can get the PE ratio. The first way is to use the advertised PE ratio TTM, or trailing 12 months. The second is to get the 5-year high and 5-year low PE ratios, add them together and divide them by 2 to get the average. I used this as it came out lower and I like to use the more conservative of the two figures. And for the few companies I've made videos on so far, this one looks the most promising. That brings us to the end of the video. If there's a stock you want me to make a video on next, leave a comment down below. Thanks for watching.